All right, traders, this is Christian from Starbucks Trade Group, and it is Tuesday, August 16th. Short squeeze meme rally. We'll go over all of that in today's market recap video. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. Let me see if I can turn on my mic here. Or sorry, not the mic, the video. There we go. Hey, how's everybody doing? All right. So yeah, I mean, let's go over a couple of these concepts that we saw for today. You know, this was this was again not a dull day. I mean, this market has us certainly on our toes in terms of what we're seeing in terms of momentum, in terms of price action, and yeah, so it kind of just makes some of these days very interesting. Today felt like one of those days in the, kind of two different days. The beginning of the day felt like a lot of the growth names were taking a bit of a break. And, I think I'm not alone with saying this, that some of the growth names probably could use a little bit of a break. The indices are getting or have gotten overbought at this point, like, measured by the relative strength index, the RSI. The S&P right now is a 74. We're also right at that 200-day moving average. We could certainly talk a little bit about that too. I think a lot of people are saying are noticing that the S&P is at the 200-day moving average. Is that going to be a cause that the S&P cannot make it through the 200-day moving average? Well, anything's possible. Everybody does look at the 200-day moving average and puts a lot of weight behind it. Especially the S&P, because there's been a number of things that have just gone right by the 200-day moving average and with no problem. But I get it. It's a bit more significant for the S&P. Interesting when you kind of look at this chart in front of you. Notice the other times where the price action has gone over the S&P 500, earlier this year. It wasn't really a case of pause or right there getting absolutely rejected. I guess here you can make a case that the 200-day moving average came into effect, but it's kind of gone back and forth, and it's tough to really tell. Maybe a little bit of digestion here, but it's not anything out of the norm. But I'm more fixated, I think, on this thing. To me, anyway, is that I think that if you look at the RSI, right, especially for the indices, a lot of people like when single stocks, like yesterday's video, I was debating volume, right, and about how that's different for the indices, right? People complaining about low volume on the move up, right? That's a complete farce, right? In the indices, they never rally on big volume, right? They rally on low volume. That's what they do, and you can go over time. Now, I don't want to go rehash that because that was yesterday's video, but I think with the indices, it's a little bit frothy when probably going to use that term a couple times in this video, but it is a little bit frothy when the indices get into overbought territory. So this is the S&P. Before I kind of go on to anything else, even when we had a little bit of a sell program at the end of the day, one of the things that I did was bring up the chart, the 1-hour chart, and we didn't really lose the trend on this rejection up here. This bar where we started to kind of move higher, and I just thought we were a little bit too hot for the day. I don't know if you could say that that's what it was that we got rejected. Qs, and I'll bring up the Qs rather than NASDAQ futures because I think people like to look at that versus NASDAQ futures, but this is close on the RSI, right? This is about 68. Where we're really overbought is on IWM, which was flat by the day, but for the day, I should say. But it's a 75 RSI, right? I mean, that's pretty hot, right? And that's another one too. Like, how many people said yesterday, "Oh my God, IWM's getting to the 200-day moving average," right? It's actually gotten above, right? So again, it hasn't launched higher. It's been doing what it's been doing the whole time, right? Even like the stock that everybody talks about, Apple. Now, Apple kind of jumped over the 200-day moving average, retested it. But again, my point is I would not get too dramatic about the 200-day moving average. Yes, there's a lot of people who look at it, and maybe there are some trade decisions based on it, but I think there's other things that are more important. That's just me, and that's just my opinion. Another thing to note here too, right? I talk a lot about signals in the market. One of the signals that I use is the 5-day um, moving average, 5-day exponential moving average on my chart, right? I talked about that in yesterday's video, so I'm not going to spend much time here. But if you go through each of the major indices, the price is still above the 5-period moving average. Again, why do I use that? It helps me ride the trend, right? One of the things, and I know we're talking about resistance, potential resistance with the 200-day moving average, but really watching the 5-day moving average, if you're a trend trader like myself and you're trying to capture the majority of the move and not trying to time tops, not trying to time bottoms, right? What most trend traders are trying to do is make the money on the majority of this the swing or the trend higher. That's why I try to stick to the 5-day moving average rather than try to second guess and make predictions. So right now we're still going above that, and you could kind of formulate your opinion on when that's going to stop. All right. So a couple other things that were notable today. We go back to my spreadsheet over here. The Dow stocks, which also this also happened yesterday too, right? I don't see that many people talking about this yesterday, right? The Dow got crossed above the 200-day moving average yesterday, had some continuation today. Walmart and Home Depot drove a lot of that performance. And maybe the next area that we could get to is this 345. But again, the reason why I'm just showing a couple of examples here is because people really get scared of these things, right? When the 200-day moving comes upon. But so that's why I'm showing, I could show many single stocks. I could show other, indices that made it over the 200-day moving average without an issue. Just one of those things that I try to provide a little bit of different perspective in these end of day videos. So what were some other things that happened today? Well, before I get to the short squeezes and the meme rally and all that, what I thought was kind of interesting today is crude. Right, I've been spending a lot of time on crude. Because I know, I had some energy positions coming into today. I know others, have some energy positions on because the charts really started to look good towards the end of last week. A lot of nat gas stocks, a lot of coal stocks looked pretty good. But I like to be in energy stocks when crude is going up. Now we could look at a couple of the other commodities too, but here was your break below the value area. And then here was your retest, which again, I've been going over this a couple times, but now we did just barely stay above this, but it bottom line, it looks fairly weak to me, right? And it would be interesting if buyers come in here, but still, I do think, going back to the 200-day moving average, I do think that that crude really needs to regain that for me to kind of get big back into energy stocks, right? So that's around 94. That coincides with the bottom of value for the month, right? Now, nat gas is a different story, right? Nat gas was up 7%. So very different markets going on here in energy commodities. Nat gas continues to move higher, but crude moves lower. So, I took that as, for now, here's what the ETF looks like in the space. And we'll just kind of have to pay attention to what crude does. I think if crude stabilizes, you might see another rally out of energy stocks, or if crude gets back above that level that I mentioned. But it's going to be very interesting with the difference that's going on in nat gas and oil. So again, that's something interesting that I find. Coming into today, my plan was to reduce risk. Not because we're seeing any sell signals, but just because we've had a pretty decent move. We also have options expiration this week, right? We know that we have positive gamma right now in the market, but that could flip once we get through monthly option expiration. So I would rather be a little bit more conservative considering the rally that we've had. You know, when you put all those factors, you know, I look at a bunch of, you know, different factors. Price and trend is always number one for me, right? So that's where I make the majority of my decisions. But if I see changes in sentiment, if I see some things that I don't like, it's a reason for me to take some profits. Again, I'm not going, you know, completely into cash, but I'm just taking some positions off here and there where I think it makes sense to, right? Also, the way that this market is moving, right? It just feels like you don't need to come in right now with a whole bunch of, you know, have a whole bunch of positions on. You can kind of, you know, maneuver around where there's momentum in this market and, you know, make some money on that. So let's get over to what one of the key sectors was for the day. That's XRT, the retail ETF. So this is, you know, I talked about, I think yesterday, equally weighted biotech perhaps, right? Or if not in yesterday's video, the day before, right? So XRT is also one of those equally weighted ETFs. And I think the example that I gave yesterday, or what I was referring to, is that your largest names in the ETF, again, it's equally weighted. It doesn't rebalance until September, right? So what's the variable that changes between those quarterly rebalance dates? And the last one was in June, is price. So certain things will outperform one another, and they will become, as certain names outperform, they will become larger weights. As certain names underperform, they will become smaller weights. So if you, before we get to today's movers, if you look at the biggest weight right now in the XRT, it's Carvana, it's Rite Aid, it's Chewy, it's Etsy, it's Dick's Sporting Goods, it's EVGO, right? Wayfair. These are all names that have rallied the most since June, right? Your underperformers, right? If we go to the bottom weights, let's make sure I've got this sorted. Yep, I have this sorted the right way. Are Weiss Markets, which always seems to underperform, Kohl's, travel centers, you know, things like that. Groupon, Macy's. Those have been your underperformers. Winmark, I'm not even sure what that is. Liquidity Services, Arco, those are your underperformers over the last quarter. So that's just the math behind an equally weighted ETF. So let's go to today's movers. So this move in Walmart and in Home Depot, I think was one of the catalysts. And then of course, Bed Bath & Beyond moving, you know, huge to the upside. You know, the way that I would kind of say the move in some of these names that are squeezing like this is you know, there probably was just a little bit, you know, too much short interest, right? This was something that just came out from Mr. Walter Bloomberg. From June 6th to August 12th, short interest in the U.S. stock market increased by $125 billion, or roughly 14%, according to technology and data analytics from S3 Partners, right? So that's useful information, right? High short interest can do that, right? That's why people do comb through and they scan for high short interest names, because once there is some positive news in that stock, it could force the shorts to cover, right? That's something that I've been talking about. You know, I've been talking about similarly with you know, analyzing the monthly report, not the monthly report, the weekly report that comes out from the CFTC on S&P futures positioning. Again, that's different than single stocks, but we've seen the speculators, right, the non-commercial group, you know, have been increasing their short position. We've seen things like SQQQ, which you probably have seen my Twitter posts about that, seeing the largest inflows ever in the last month, inflows into a triple levered inverse fund that is benchmarked to QQQ, but obviously the inverse and three times short. So largest inflows ever into that ETF. So that's partially why you're seeing some of these squeezes. You know, people, you know, funds, whoever really decided to go short at the lows of the market, right? So you know, my opinion on this is, without getting into too much trouble and people getting angry at me, is that if you can make money on some of these things, go for it. I mean, you know, to me, short interest alone is not a reason to buy something, but that's me. I think, you know, what I used to hear when I started trading and investing was you need to have 3 reasons why you own something, right? You know, you have to have 3 reasons why you really like a company, right? Short interest could be a factor, but you know, I particularly don't get excited about having to go to Bed Bath & Beyond, but everybody's different and everybody has different opinions. That's what makes a market. But I think this type of thing will be short-lived. I understand that there was another catalyst that I guess it's the CEO of AMC or GameStop also bought call options. But again, it's kind of the same thing, right? That doesn't, like, I don't know what the fundamental reason is to buy Bed Bath & Beyond, but to each his own, right? Again, that's just me. But this did cause every other name with short interest to kind of fly. What did I do? I picked a name, and I always kind of go back to some names that have, you know, decent earnings. I thought Wayfair. I like the chart pattern in Wayfair. It had gone down significantly. It's been basing for a while. So that's what I traded today. I did get out of that. Most of when I trade things like this, it's going to be for day trades. So I made some money in this. I took a target at 76. Even though I think that this Wayfair, if you're still in it, right, it doesn't mean that these types of moves are going to stop in one day. I think ultimately Wayfair could get to 79. Right. I also saw some of these other names on here. Right? I didn't even see this one, Stitch Fix. Right, another one that's, you know, heavy short interest, went all the way up to that version point of control. Right, these are great for telling you where you've got overhead supply, but still, I mean, you know, just a ginormous move. Another one that I was looking at, Dick's Sporting Goods, you know, making a nice move. Remember, this was one of the first companies, and this was about a quarter ago, that really kind of turned things around on when they had bad earnings. They had bad earnings and the stock actually bottomed then. That was all the way back on what, 523, 524? 525. They came out, I think, and they warned or something like that. Something was bad with their earnings report, and they actually went down, took out that virgin point of control, and they rallied. They kind of came in here back and not retested, but maybe retested in here and then ran. But you know, very interesting to see what's going on, you know, with this retail group, right? And there are opportunities there. All right. There was another one too that I thought was interesting. Again, I like to see names break out. This was brought to my attention. OXM, right? Oxford Industries, right? This is the maker. They have a few different brands, but this is Tommy Bahama, right? If anybody ever has seen those shirts, right? A great scene from Forgetting Sarah Marshall, right? Tommy Bahama. If you know that movie. But in any event, this is a really clean breakout. Right? This will be interesting to see if this has continuation. Maybe even an inside day might warrant a better buying opportunity. Right? And that's kind of one of the last points that I wanted to get to in this video. By the way, here's how I traded today. I didn't have a wonderful trading day. You know, I was kind of caught in a little bit of exposure. I tried a little bit of a day trade in Tesla in the beginning of the day. It didn't work very well. I got out of a couple other last pieces of trades. A couple of them, you know, for a little bit less than my cost basis. Run, which was a name that I was in last week. I hold ENPH, so I didn't want to double up in that. Charge Point also, you know, very interesting, by the way, the short squeezes, right? You would think, oh, ARK must have been up huge on the short squeezes. No. Now, ARK was down almost 3%. At one point was down like 5% for the day. So the short squeezes went to mostly retail type names. They didn't go to the innovation names and so forth. So again, just the overall dynamics in this market are just very interesting to me, right? All kinds of short squeezes, and meanwhile, the ARK Innovation ETF is down 3%. Perhaps a lot of short covering has already happened here, right? Again, very interesting to kind of note some of these areas which didn't get that bounce today, right? So you know, I wanted to make one quick point about clean energy without this video getting too long. You know, you have to put some of these things in context, right? Clean energy, this is the PBW ETF, was up 10% last week. That is a huge move for an ETF that tracks a group of stocks. So it was down today, so you look and you're like, oh, geez, down 2.4%. That's a big down day, right? But it's really just retracing or, even digesting. Just crazy to say that with a group down 2.4%, you would think, wow, that's a big sell-off. Really, it's just actually an inside day from Friday, right? So very interesting to kind of see the type of moves that we're seeing in this market. So I go back to my comment that I'm saying that you don't have to carry, I don't personally think that you need to carry a lot of risk after the size of a move. Again, I'm not telling anybody what to do. The videos for information purposes only, but when you have moves like this, right, that's my thought anyway on just what we're seeing right now, is that you don't have to have a ton of risk. I liked whenever I see a Walmart go up or something that just is, in my opinion, again, don't get mad at me, but I don't think Walmart is the highest quality right now in the market. But I think things like Costco, even though it didn't close on its highs, I did take a position in this. It did take out this 1 hour VPOC, so it's going to have to contend a little bit with this overhead supply. But for now, I took a target in it because I do think Costco is best in breed, right, in terms of the retail group, right? So here's my entry. I took a target in this somewhere in here. There it is. Just a quick target. I mean, that's not a very big target considering it's a $550 stock, but in any event, there you go. I mentioned, I got out of Valero, which is a name that I added to yesterday. I tried some PSX today, right? But it just didn't look good to me. So that's it. That's that for now. Also, right, I just kind of want to bring up a couple other, I've been trying to just throw in a couple different concepts in here, but I'm actually, a lot of the earnings strength names that we've seen, I'm actually okay with some of them digesting a little bit because they got really, just like I talked about the indices overbought, so are a lot of stocks, right? So this is a semiconductor, Global Foundries, right? Had this huge candle on Friday, one inside day yesterday, and today's dip, right? I just thought, hey, I'm going to try a trade in here. So I did buy some of this today, right? And there's going to be, I think, a lot of opportunities that are going to come, in terms of these names that have had really good earnings or really good earnings reactions, but just need to digest a little bit, right? So that's GFS, and I think I did take a target in this at 64.50, right? And again, notice the stock is kind of back down to where my cost basis is. Taking those targets right now just gives me the flexibility, right? So that I can go and re-add that target if I want to. Another one that I kind of added, a little bit poor timing today, but I like what's going on with this Estee Lauder, right? Some of these like beauty type names, kind of a little bit of retail. Now this name is going to have earnings, so I'll be out of this name before they report earnings, but I think it could possibly run a little bit into their report. All right, guys, so that's it. Bottom line, I always try to give kind of the bottom line here at the end of the video, is that the indices are overbought. Oh, I had one other thing that I wanted to go over. I put this out on Twitter, asking people, because this concept has kind of come up a couple times. When you see these short squeezes and these meme stocks go, is this like the last hurrah of the move, right? We have been in a pretty mature swing, right? How long has this swing higher been going on for, right? Basically got going, so it's been about a month, right, that we've had this up move, right, in the S&P out of this this break of this pattern. So give or take a month, right? Does this mark the end of the rally when we see these meme stocks get going? I don't. It's something to monitor. What I did with this chart, and you could put your comment in the YouTube video. You could certainly like the YouTube video too. I would like that. But if you disagree with this, or if you think that there's something not right with this analysis, because this is the first time that I put this chart together, but this is the advanced decline line. In the white line is the advanced decline of the NASDAQ. Remember, a lot of people were complaining last year that the indices kept on going higher, but the participation kept on getting lower, right? And that lasted basically for almost a year, right? Where we saw the topping out of the advanced decline line in the Nasdaq or in the NYSE, right? And they kept on, like, the deterioration really kind of picked up in the middle of the year. And then especially, right in here, but that's a warning signal, right? When you have a divergence, when the overall indices are going up, but they're doing it on less participation, that is normally known as a divergence and a warning signal. And at some point, will eventually, in my opinion, causes the indices to weaken and break down. Notice what we had, back then when the red line is GME, right? When that spiked the first time, that was kind of the high point of the participation in the advanced decline line, right? Now, this happened a couple times afterwards. GME went up a second time, not as high as the first, along with AMC, and that's the blue line, right? And you could see it just barely made a lower high of participation, right? And that kind of that meme rally that we saw and all those short squeezes did actually mark the high in terms of the participation and the indices, and they began to kind of move down. We had one more move in the beginning of November where we had a strong rally with good participation. Again, it's the advanced decline line, so it's more things advancing versus declining, right? And then things really kind of trailed off big time in November. And that was the last time that these things really rallied. And since then, they've been making lower highs. Even now, with GameStop and AMC rallying, they're still making lower highs, right? So fast forward to what we have now. And I think I have that on a separate chart. So here's what the advanced decline line looks like now, right? And that's been one of the things that you've been hearing: incorrect analysis from financial media. You hear a lot about, oh, it's just Apple. Apple's the one that's bringing up the whole market. That's not true, because there's been a lot more stocks that are advancing versus declining. Now, Apple's the biggest weight in the S&P, so it does have an effect. But this has been the expansion in breadth. This is a good thing. So what we want to watch in the coming days, weeks, maybe even longer, is if we're going to continue to see breadth get better and better, or if it's going to begin to weaken and come back down. Now, another thing that could happen, of course, is it goes sideways for a little while because the markets are overbought, the indices are overbought. That would be acceptable. All right. But I think what we don't want to see is really a big move back down in breadth. So we don't have that yet. You have to stay tuned for that. And, these are going to be things to watch. And that's what makes the markets fun too, is that you have to be patient. And, you could look at several different things to do your analysis, to come up with your conclusion. For now, bottom line is we don't have any sell signal in the indices, but at any point we could get some volatility, right? That could change things. But for now, the indices continue to grind forward, even though that they were just the S&P was up 20 basis points and the Qs were down. We don't really have anything changing yet, but that's something that we'll be keeping a close eye. All right, guys, have a great night. See you tomorrow.